On account of falling gas prices, it's probably not the best time to publish this video, but that's okay, as this video will be relevant to other similar circumstances of price inflation. Right, so some months before the release of this video, the Conservative Premier of the province of Alberta, Canada, was facing a situation of rising gas prices squeezing consumers. He went with one of the standard Conservative responses to any issue, lowering taxes, in this case specifically gasoline taxes paid at the pump. The problem is, if you're trying to lower gas costs for consumers, this is a bad solution. Let me explain. So, see, most attempts to impose taxes on businesses and their transactions face this thing called tax incidence, which basically means how much of a tax that is legally imposed on a business or on a transaction is paid for by them and how much is passed on to consumers. Which is to say, when a sales tax is imposed, an effective business doesn't just take what their price would have been without taxes and then just add the tax percentage on it. They actually adjust their prices so that the final amount the consumer pays reflects what is necessary to complete their sales. As always in Economics 101, there are things that complicate this textbook explanation. But in summary, the less that the seller is capable of adjusting their supply and the more the buyer is capable of adjusting their demand, the more the seller has to pay of the tax. In economic terms, the more inelastic the supply and the more elastic the demand. You usually can eyeball this sort of thing with thought experiments to see how they apply to a given product, but we don't really need to do that here. Study after study show that if you cut gas taxes, prices will rise close to what consumers would have had to pay after those taxes anyway, meaning that you effectively increase profits for gas stations, lower revenue for the government, and do little to nothing to help consumers when you cut gas taxes. Lo and behold, this is exactly what happened in Alberta within like 2 weeks of cutting gas taxes, and these conservative champions of the free market, who either don't know how this works or are banking on other people not knowing how this works, went to the Competition Bureau of Canada to complain about price fixing. It's not price fixing. It's prices drifting towards what's most profitable, because that's what all businesses do, and if they don't do that, they end up being outcompeted by those that do. So then, what should be the policy response to crushing prices in supply inelastic sectors? Well, it depends on what you want to accomplish, but let's limit ourselves to trying to do what the gas tax cut was allegedly meant to do, which is lower costs for those buying gasoline. Now, the most straightforward answer here is the government just sending money to car owners to cover the higher prices, and if you want to make this cost neutral and contained to the gasoline sector, what you do is raise, not lower, gas taxes. Or you come up with some boutique excessive profits tax or whatever that basically accomplishes the same thing with more administrative costs. So the next question is this just something you can do with no limits? Are there no negative consequences to just raising taxes like this? Well, it depends on what you consider negative. The higher you raise these gas taxes, the more you eat into gas station profitability. The more you eat into that profitability, the more that you'll chase out low profitability and likely small business owned stations, which will be incentivized to sell out to those who have higher profitability, probably due to the benefits of scale that come from being bigger businesses. Eventually, you could push it so high that gas stations don't only get sold out, they start getting shut down. At that point, you'd have to accept fewer gas stations or have the government replace them. Obviously, this doesn't apply to just gas stations, but other similar tax increase scenarios. Now, to me, on both accounts, this would be good, actually. I have an antipathy to small business that only will become more clear the more videos I post, and I don't mind state ownership either. But if you're not into that sort of thing, yes, there's an upper limit on taxation here. So, what's the lesson here? It's essentially that whether or not cutting taxes actually significantly lowers costs is highly dependent on what is having its taxes cut, and that direct payments combined with taxes are a good way to deal with the consequences of inflation. Also, that advancing the social good is frequently incompatible with protecting small businesses. Anyway, thanks for watching. Please like, share, subscribe, and comment. And remember, smell is ugly.